Hello, Wolfpack. We're back. We had the jobs report come out from the United States of America yesterday. The estimations or the predictions, whatever you want to call them, by the market were dramatically wrong. And this has been the case on many occasions. And this is what we're leading into in today's topic. Now, we have had many expectations from the general market participants and all of, the analytical companies, etc., whatever, predicting certain things, the central banks predicting certain numbers in regards to inflation, in regards to job numbers, in regards to where certain asset prices should be. They've all been wrong. Why is this? Because they're trying to create a better picture than what the picture really is. And I am not surprised by this at all. I mean, what we've seen is the bond yields, for example, see a massive pump on the 2-year bond yield, for example, going up basically 10% in the last 24 hours because of that. And it's because, well, what happens is, the Federal Reserve, whatever it may be, analytical companies, market participants, they get people ready and prepared, and they price in a number that is dramatically better looking than the real stuff, the real data. I mean, if you look at the inflation data for this month, the expected inflation data, we can see expected inflation data. For example, the general consensus in the market was 8.3% in May. The actual inflation data was 0.3% higher. It was 8.8% in June. The actual inflation number was 0.3% higher. Now, what they're expecting is actually just a decrease in the inflation number, right? So they're expecting a decrease for the first time, and this is interesting, right? But it gets to a point where it's like, at what point do we need to stop trusting these numbers? Because every single one has been wrong, and not just wrong by a little bit, wrong by a lot. A 0.3%, room for error is massive, but we can't deny the fact that, what we've seen generally is the consensus or the prediction by the market being a rise on year-on-year inflation month on month. Now we're seeing for the first time the expectation of the market being a decrease in inflation year-on-year. And it would justify, and inflation topping out would actually justify what's happening right off the market, right? It would make sense because what we're seeing right now is quite a big pump, quite a big rally. Yes, there's no bullish price action confirmed yet because we haven't taken back any macro levels, but we are, generally speaking, seeing a massive amount of strength come back into the market. That's completely undeniable. For example, the 200-week SMA applied to the 4-hourly chart, you can see how this thing is holding for support. You can see we've made 2 dramatic leaps up to 23.8K, which is a major resistance level. Now, those of you guys who don't know my opinion on Bitcoin, I'm assuming most of you probably do. My opinion on Bitcoin is basically this, right? We are in a macro bear market until 28.6K is taken. That is the objectively crucial level for Bitcoin. Now, with that said, if we close a weekly candle above 23.8K, I'd be happy to buy Bitcoin in the short term, because if we look at something like the volume profile, we can see that there is basically no resistance between 23.8K and 28.6K on a weekly time frame. And so if we were to break 23.8K, we would basically zoom straight up to 28.6K. And from that point, we can test that level and basically decide whether it's a dead cat bounce or a bull market, or an end to the bear market at least, right? So, pretty critical time. I mean, we've only got 48 hours, for example, until the weekly candle actually closes. As I just said, if we close that weekly above 23.8K, I'm buying Bitcoin, right? I'm buying long-term Bitcoin bags. And, well, not necessarily long-term, but I'm buying Bitcoin bags at least until we reach 28.6K. And then if we break above that, I mean, that's just confirmation of the bear market over, right? But I'm buying, Bitcoin bags, and then when we get to 28.6K, I might sell them and then buy again once we get back above it, right? Because, there is rarely, objectively speaking, no proper reason, in my opinion at least, to be macro bullish, like longer time frame bullish until 28.6K is flipped, right? That's the level that supported Bitcoin throughout the entire bull market structure. That's the level that's important to me. But yeah, 23.8K, if we weekly candle above that in 48 hours, I'd be happy to buy some Bitcoin bags, just as a little scalp trade, whatever, swing trade, whatever you want to call it. And then hopefully by that point, once we get to 28.6, hopefully by that point, inflation stopped out, the market's looking a little bit better, and it just jumps back above. Now, what would this mean for the 4-year cycle theory? You guys know I'm a big proponent of the 4-year cycle theory, big believer in the 4-year cycle theory. The 4-year cycle theory would not be invalidated by this happening. And you might think, wow, what do you mean? The 4-year cycle theory, as I see it, is basically a date range trend. So it's triggered by the halving, it's a date range trend on Bitcoin, and it predicts a bottom in Q4. Now, this is what I mean, and this is where people get confused. I am expecting a Q4 bottom on a macro time frame until we break 28.6K, because there's nothing else to expect, right? Because I'm expecting based on confirmed data. Now, if I had to speculate, it'd be a slightly different question, right? But if I'm, basing my objective predictions based on confirmed data, the speculation would be, well, this prediction's relevant until it's invalid, right? And it's invalid at 28.6K. So that's what I would expect. Now, if we do happen to break above 28.6K, which again, I do not see as a very unlikely thing. I think it's relatively likely, especially if inflation tops out. You have to understand there's a difference between my prediction and my expectation and my, I guess you could say, probability surrounding my expectations. Very hard to explain. Point is, doesn't really matter. The point is, if we have bottomed out 17K, for example, just because of the fact that the 4-year cycle date range trend was incorrect, it doesn't mean the 4-year cycle doesn't exist. The 4-year cycle still exists. We still topped out 4 years after the last cycle. We still bottomed out 4 years after the last cycle, and we still started off the bull market at the halving. It would mean that this specific date range trend is invalid, and we need to be looking out for new data to confirm a new date range trend. But moving back to the daily chart, for example, what we're seeing really, 23.8K, we've got 48 hours to get above it. Inflation's topped out. Yeah, it might have been. Who knows? It's not confirmed yet. It's confirmed in like 4 days. We'll see. Maybe it's just a temporary dip. Maybe it goes back up. This is what I mean. It's very, very complicated. And this is why I think it's way too early to say, oh, the bottom's in for sure, guys. The bottom's in for sure. Because we just don't know. Like, we just haven't seen the data. We haven't seen the evidence on the TA. We haven't seen the evidence on the FA. We don't know really anything. We're just kind of looking at an expected inflation number and guessing. So yeah, I think it's way too early. And if we're looking at the actual structures on the daily chart in terms of TA, what we can see is that we had a bear flag formation. We broke it to the upside. We've come back down within it, and we're rejecting from the top of the bear flag while we're in an ascending wedge formation, while we are being compressed below a massive RSI resistance line, while we're seeing a bearish MACD cross. So, I don't know. Those of you who are getting bullish here, I don't know what to tell you. Like, that's ridiculously not bullish. That's ridiculously bearish stuff, TA-wise. And that's the thing about this market right now. That's the TA. But, realistically, if inflation tops out, that's going to be a bit more important than a structure that's been forming for a month and a half on Bitcoin. Let's be real here. But, the TA is certainly not looking good. The TA is certainly saying, hey, the bottom's not in yet. The TA is certainly saying, if you think the bottom is in here, you're probably going to get wrecked, right? That's what it's saying. Now, I'm not saying that's going to happen, but it's, we've got two bearish structures forming on top of each other with a bearish MACD cross and a strong RSI resistance line, while we have basically no confirmation other than a bit of speculation about what's going on with the macro, right? If you're bullish here, macro, it's quite simple. You're too early to the party, right? You need to sit back, you need to relax, and you need to understand that realistically, buying Bitcoin at 23.8K on a weekly close is not much different than buying Bitcoin at 23.2K. Like, how much money are you really gonna, like, couple $100? Wow, big deal. It's, you're evading a massive financial loss as a risk of buying below resistance, right? Buying below resistance is never historically a good idea, and just because the macro situation is slightly confusing, that doesn't make it any of a better idea. So chill out, be calm. I say it over and over again, time and time again. I'll keep saying it because I think it's a very, very important message. Be calm, be objective. It doesn't matter if you get the bottom on Bitcoin. What matters is if you get the trend reversal. The trend reversal is exponentially more important than the bottom, and any trader will tell you that. When people trade, for example, when I trade altcoins on a daily basis in my VIP group, we don't trade where we think the bottom is going to be. We don't just buy randomly at support. We wait until confirmed breakouts to the upside, then we buy. We're minimizing our reward, yes, of course, but we're dramatically eliminating risk almost entirely, right? We're to the point where you're only getting a few percent risk. So, that's what I'd say about it. Now, before we end the video, I'm going to be doing a live stream over the next 2 days. I'll set up the scheduled live stream probably on Monday in Australia time. So I'll be like Sunday in the US. I'll try do it at a different time. I usually do it in the morning for Australia, which ends up being bad time zone for people in Europe, etc. I'll try to sort it out and get it in the best time possible, but just keep an eye out for that. Now, before we end the video, I want to look at Wolves of Crypto VIP. If you're interested in becoming a VIP member, if you're interested in getting trading signals sub-daily, go to the YouTube channel homepage, click the join button there, or below this video, there should be a join button, and you can see all the rewards you get for that. Highly recommend you guys check that out. Then we've got the BitGet Exchange, which we use for the VIP members, and we also use as kind of the overarching exchange for this entire channel, right? If you want a good exchange, not just Binance, everyone just settles for Binance, right? If you want an actual good exchange, half the fees of Binance, non-KYC, in alignment with what Bitcoin and cryptocurrency actually is, decentralized on an individual level, this is the exchange for you. So go ahead, sign up to BitGet, use my referral link, get access to a reward center. It's really a no-brainer. Go ahead and do that. It takes 5 minutes. And then also, if you want to learn how to trade, which I highly recommend everyone does, whether you do it through this course or not, the fact of the matter is you should be able to analyze a chart for yourself if you're in crypto. But myself and Megro Crypto have created the Crypto Academy in case you wanted to do it with us. Become a trader, 10-unit course. Unit 1 to Unit 10 teaching you everything you need to know, or 90% of the content you need to know about trading, how to use an exchange, how to allocate funds into a position, how to stop loss, where to set it, what certain indicators do, how to identify fake outs. Everything you need to know about trading, basically, almost, is in this course, and I highly recommend you check that out. Send us an email here at cryptoacademycourses@gmail.com, and we'll get back to you with all the relevant information. Thanks for watching, guys. Hope you enjoyed the video, and I'll catch you in the next one. Cheers.